We are live.
All right, hello everyone. Coming live from you and the Chandler Paul in the recording studio. All right, done talking about that. So Troy and I picked Vertiv Holdings as our company. Pretty much they power and cool the digital backbone of our new world that we live in, artificial intelligence. Data centers don't run without companies like Vertiv. And as you will see in this presentation, their position in the AI and cloud build out made them a very exciting industrial company to research. Here's their correlation uh, with the portfolio. Not really correlated with Uber. Will Scott more correlated, but nothing much to say there. All right. So Bird Sims trades on the NYSE with a market cap around 69 billion. And even though their PE of 86 seems very rich, their PEG ratio of 1.4 tells a different story. Investors are paying for strong forward growth. And as you'll see in the rest of the presentation, we'll tell you more about that.
My clicker.
There we go. So I'm going to run down a little bit of the company background. Vertiv is a company with a focus on providing digital infrastructure in both commercial and industrial environments. They operate on a global scale and work business to business, providing technology and services to support data centers and communications networks. Their products are used in many different market sectors, from manufacturing to healthcare, and they launched as a standalone company in 2016 after being acquired by private equity. Next up, we have their business model overview, and Vertiv's mission is to pioneer and deliver end-to-end power and cooling technologies to help our customers stay resilient, optimized, and future-ready. Their core strategy is to supply quality and efficient products to meet customer demand while being environmentally conscious. Their revenue is generated through the sale of both their products and services, through contracts to support new infrastructure or provide maintenance for existing infrastructure. Next up is their business segments, which is comprised of two different parts, their products and services. And within products is three main groups. You have thermal management, which is their liquid cooling units, critical power, which is their transformers that generate power for data centers, and infrastructure, which is their enclosures used to house data centers and their servers. Their services or relate to the installation and maintenance of their products or data center related infrastructure, as well as providing training on their products.
Here's the revenue breakdown. So as you can see, they have the products and services. Not sure why the expected growth for the products didn't show, but as you can see, the services have shown or are showing a lot more growth in the future, which is good. And they're all growing, and that's all I got to say about the revenue, but we'll get more into that later. All right. And the offerings and delivery, how do they work? So Vertiv sells both directly and through channel partners. Direct sales handle huge customized products, think AWS or Google cloud facilities that need cooling and power systems. Channel partners extend their reach to smaller clients. Then Vertiv also stays with customers for the entire life cycle, from consulting to spare parts. And I cannot stress that enough. As you will see, some businesses sell and leave. Vertiv sells and supports. This creates reoccurring revenue and long-term loyalty. And as we can see, they are very diversified throughout the world, with 52% coming from the US and the rest being split up with EMEA in Asia Pacific, showing strength in the US while continuing opportunity internationally. And about 70% of Vertiv's revenue comes from data centers. And this is exactly where AI demand is exploding. The rest comes from communication networks and industrial clients with hospitals or manufacturers that need uninterrupted power, so 24/7. The customer mix gives them a strong base, but data centers are definitely the growth engine in this company.
So I kind of touched on it earlier, but just to rehash their core strategy a little bit, they focus on creating products that meet modern demands in the expansion of data centers and infrastructure. And in carrying out their business practices, they are always aware of their environmental impact. Currently, Vertiv is working on any technological innovations, especially in their product line, to better meet the demands of AI-intensive infrastructure. A little rundown on the people summary. Their current CEO, who is also a member of the board of directors, is Giordano Albertazzi. He's been with the company since 1998. He serves as the CEO. There's a little bit of duality present, but he's one of the very few internal board members, like one of two, and the chair of the department or the directors is an external member. The company was originally founded by Ralph Leiber under a different name in 1946 that specialized in cooling systems for HVACs. Before the company was acquired by Emerson in 1987, which was a tech and engineering company, but then rebranded to Emerson Network Power. A segment of the company was then sold to a private equity and rebranded to Vertiv in 2016. Many executives, including the CEO, are internal employees and have at least a decade of experience with the company. And again, a majority of the board is independent and hold connections outside the company and the sector. A little rundown of the patents and proprietary information. Vertiv holds a large amount of patents, about 3,000 registered and another 1,200 pending, mostly related to their product line and their liquid cooling systems. Their intellectual property portfolio includes those patents, as well as trademarks and customer data, and then non-public information regarding trade secrets and other product information.
All right, and their recent earnings in Q2, just a quick checkup on the quarter, and I just want to put in the space is earnings for Q3 come out tomorrow, and I plan on adding them to the discussion board as that could further our decision. But as we can see, revenue's up 35% with an adjusted EPS of 95 cents, adjusted EBIT up 35% as well. But the rundown is fundamentals are accelerating. And the earnings call. On the call, they framed Vertiv as the connective tissue for AI data centers. And this is linking gray space, which is their power and thermal, with white space, IT and racks. They highlighted one GPU gen ahead product timing and a growing services flywheel from liquid cooling, which supports margin durability, and guidance moved up again. And they reiterated momentum in hyperscale while calling EMEA 2025 flat, but in 2026 we should see upswing.
So where is this company going? Some of the driving factors of growth is their AI product innovation. And Vertiv is taking, like I mentioned earlier, a very future-focused approach where they're expanding their product offerings to better match the demand for AI-intensive infrastructure and high-performance computing. Large AI workloads and high-performance computing require a lot more power and a lot more cooling, which that's where Vertiv comes into play. Next is their lifecycle support. So from product launch to 5 years after its discontinuation, Vertiv offers support and service over the entire lifecycle of their products. Their EOL or end of life policy covers both the hardware and the software of those products. Keeps businesses who bought products from Vertiv with the company for their services as opposed to going through a different contractor, which is kind of what Kevin talked about earlier. Next is their strategic partnerships. So again, like Kevin mentioned, Vertiv is partnering with big tech companies as well as working with other of the Magnificent Seven big tech stocks who use their products to support their own data centers like Amazon Web Services and Google. Vertiv is constantly making improvements to their technology, which leads to my next point in tech leadership, such as their modular integrations, which combine all three of their product lines into one singular unit and then use as additions to pre-existing data infrastructure. They're also continue to work on their liquid cooling technology, which allows them to lead the industry in this product line and secure more thermal service contracts. Next is their competitive advantages. So kind of touching on that same point again, their modular integration covers those tri-product units that I mentioned on the last slide, but also includes Vertiv's tailoring of customer needs, which pre-engineers, pre-test, and validates solutions before they're implemented to reduce risks and future maintenance. Next is their large human capital, which Vertiv cites their employees as one of their greatest assets, and it has developments to work to make sure that their employees are constantly up to date on their products and services. This has helped to build a better relationship with employees and aligning the company strategy from within, which also shows how a bunch of their executives were internal hires. It kind of helps promote that. Next is their supply chain resiliency, which Vertiv has implemented a global supply chain risk and resiliency program to counter global disruptions and continue to be efficient, especially important for recent tariff headwinds. Lastly is their design for reliability. So in addition to the pre-engineering and validations, This DOR approach, which comprehensively tests their products for consistency, as well as how well it can perform in unpredictable situations. It allows them to implement all necessary safeguards before mass production of their products. And again, going back to the reducing risks and future maintenance for their products. Just kind of wanted to touch on this. Throughout all the research I did on Vertiv, they constantly mention their environmental sustainability. So they always strive towards environmentally responsible products and operations. Many of their manufacturing production facilities are exploring options for on-site renewable energy, and 4 out of their 24 manufacturing facilities have solar power generation. Again, many of their sites also have this ISO 14001 certification, which is basically the highest credit an administration can receive regarding their environmental management. And again, with all this major growth that Vertiv is receiving through the expansion of AI, they expose themselves to, I guess, some sort of level of risk. So AI dependency, a large amount of their recent growth has come from cycles in AI infrastructure. So slowdowns can temporarily stunt the company's growth. Their overcapacity. So if production shifts greatly to meet those demands of AI infrastructure, they could have excess inventory if slowdown occurs. Then their business concentration. So like mentioned earlier, Vertiv is partnering and working with big tech Magnificent Seven stocks, which concentrates where their growth is coming from. Lastly is their sustainability risk. So as mentioned on the last slide, Vertiv has a big emphasis on being environmentally friendly, and new AI data centers that demand a lot of energy are being subjected to stricter emission standards, which could threaten Vertiv's ESG stance. However, even with AI infrastructure demand being cyclical, Vertiv's exposure to business goes beyond big tech stocks and is diversified on multiple channels with various businesses. Vertiv's core proposition is energy and water efficiency, and in addition to environmental management, and their tech roadmap aligns with these regulatory restrictions for up-and-coming data centers. Next, their tariff exposure. So since Vertiv operates globally and they have manufacturing facilities all across the world, they have a relatively high exposure to tariffs. These tariffs have increased costs in this regard, but Vertiv is working to materially offset these by the end of the year. Vertiv aims to reduce these costs by implementing shifts in their supply chain, as well as repricing to match costs and using their proprietary tech operating system called Vertiv OS to analyze performance and see where they can reduce costs and boost productivity.
All right, and who are they acquiring and who are they partnering? And I think this slide holds a lot of weight to where they are going. They are strategically adding to their business model. PowerBar, for example, will expand their electrical distribution and strengthen their ESG, as Troy was mentioning, is one of their biggest strengths. And CoolTerra will add to the liquid cooling sleeve, enhancing their revenue. And the recent Great Lakes will deepen white space, racks, enclosures, which is important for AI builds, and it brings that made in the USA, which will help mitigate the tariff risk. And as we've seen happen last Friday, the China 100% tariffs, that didn't really happen, but it still takes a drag on the market, and we just don't want too much of that for our portfolio at all. And Waylay is for AI hyper automation software, which will boost monitoring, optimization, and service intelligence across the fleets, helping their service model. They have an ongoing NVIDIA collaboration on 800-volt direct current architectures for future AI factories, which will position Vertiv at the power backbone of the next-gen compute.
Just going over a couple of the recent headlines. All of these were posted under the Vertiv News on the 13th of October, so about a week ago. First one is Vertiv names Craig Chamberlain Chief Financial Officer. And while this hire is external, Craig Chamberlain is replacing the current CFO of Vertiv after his retirement. He previously had Craig guy previously held the CFO position at a company called Wabtec, which is a fellow tech company based out of Ohio, which focuses on digital components and HVAC systems for transportation, but aligns with Vertiv's history as a company. Next is Vertiv collaborates with NVIDIA to advance 800 VDC platform. Kind of what Kevin was just mentioning. Recently, Vertiv announced a milestone with NVIDIA for the finalization of their design for the next generation of power architecture, which is going to be used to meet the demand for megawatt scale AI data factories. And lastly is Vertiv announcing leadership transition in the EMEA region. So Kevin mentioned earlier that this year has been kind of flat for the area, but they're stepping up a new president his name is Ryan Paul. He recently held the vice president title for over a decade and has 8 years of experience in global procurement and supply chains and hopes to strengthen Vertiv's supply chain resiliency globally.
Yeah, and I think that's their plan for 2026. As they were flat this year, I think Ryan Paul will really help get the EMEA region going. So. And then insider activity. As you can see, from a glance, 2.8 million shares were sold in 12 months, which is significant since the ones that were bought were 400,000, which I did a little digging, and I can say confidently that this is not at all something to worry about. The sale from Power Bar, actually, if you saw on the MMA slide, that we acquired them 3 years ago around that time. That sale most likely represents liquidity from their acquisition equity rather than an operational move from Veritiv of CEOs and seniors of the company just selling because they're scared. So some possible reasons is executives or founders cashing out of their holdings after a lockup investing period expired, which fits the 3 window perfectly, and or diversification or personal estate planning by I think the former CEO Philip O'Doherty, which I hope is my uncle, so I can get some of that estate. It'd be pretty nice. But other than that, there's nothing to worry about. The bought shares were from Braden and Roger in February, as you can see from the chart, but not too much on this slide. The competitors. So picking these competitors, Eaton was they were kind of close to them in their business model, as Troy will go over. But Schneider Electric, when I was going over the ratios, it's kind of hard to compute all those because they're from France. But I think they're more similar than Eaton in that way to compare with Vertiv. Eaton leans more electrical heavy, spanning aerospace and mobility, but Schneider's diversified model gives its brand strength, and it's a closer competitor to Vertiv in its offerings, as we'll go over. And here you can see the valuation gap, which I know is concerning to a lot of you all watching this presentation. Eaton trades at a 35 PE, and Schneider trades around 30. While, as we saw, Vertiv sits in the mid 80s. On paper, this looks very expensive, but as you will see when we go to the financials, this is a growing and new company, new public is what I should say, as we know they've been around. But relative to their market caps, and they have a lot of the market to capture, I think that this company has a lot to grow from there.
So just a couple of similarities between these companies. Both Eaton and Vertiv both have a similar product line in regards to power management and infrastructure. They both have a business-to-business customer base. Both provide that digital infrastructure for communication networks and industrials, and they have a similar offering for scalable infrastructure, which is just the addition of data enclosures to pre-existing infrastructure. Between Vertiv and Schneider, they have more similar product lines and product-based services. Both have tailored the product line to meet the demand for new AI technologies, and the main focus for both of these companies is in the data infrastructure industry. On the other hand, some differences between the companies, Eaton and Vertiv, when comparing product lines. Eaton's comparable products only make up a portion of the company's business segments and revenue. Eaton has more of a focus, as Kevin said, on electrical applications and lacks in comparison to Vertiv's liquid cooling technology. Eaton has a slight edge on Vertiv for supply chain, as they do manufacture their own components, and they're more of a leader in electrical products and systems rather than digital infrastructure like Vertiv. Similar to Eaton, Schneider has other business segments like industrial automation that dilute the focus of their data infrastructure, whereas Vertiv has a more direct focus within that industry. Schneider, being as it has been around longer than Vertiv, has a more recognizable brand name and resides in a more favorable market position. Schneider has different market captures that are more unique and niche, such as distribution, meter data, and supply chain management. And then, like Eaton, Schneider also edges out Vertiv on supply chain because they do manufacture their own components.
All right, now let's get to the numbers. So this is the correlation matrix. As we can see, Schneider is not as correlated as Eaton, but we'll see that in the charts. All right. So as we can see, the charts move pretty similar. In January, the DeepSeek news killed each of the stocks. April, Liberation Day, but what brought Vertiv back in April was they reported strong first quarter 2025 financial results, which helped that drive a rebound despite a market-wide sell-off and fresh concerns over tariffs. And then September, that's around when they also reported good earnings. So that shot them up, and AI demand and all their acquisitions came in August. So I think that was priced in as well. In the 1-year chart, we see pretty much the same story. There's really not much to touch on here, but because it was just correlated up to the January moment. Boom, boom, boom. Stock is moving, whatever. But here's where Vertiv really differentiates itself in the chart. They became public in 2020, sometime around then. In July and September of 2023 or 2024, July and September is when the AI industry saw more demand for power, cooling, and other infrastructure that data centers need, which accelerated their price. They started to improve their margins versus the prior year, which moved the market sentiment. And here's that zoomed in. Not really much to say here. It's just, as we can see, correlated industry hype. Competitors stayed really close to each other, just on a less scale than Vertiv, since they are more involved in the AI data center customer base. And yeah, same thing here with as a 3-year chart. Not much happened before 2023. They became public shortly after this time, so they really got to accelerate after the AI boom came.
All right, numbers. Starting off with the revenue, all of these you see is in the thousands. Common theme you'll see throughout these metrics is Vertiv's massive growth over the past 5 years, especially that jump from 22 to 23. From 2019 to 24, Vertiv's revenue went from $4.4 to $8 billion, an 81% increase over 6 years. Vertiv's year-over-year growth has outpaced its competitors since 2022, and much of Vertiv's growth has came from AI infrastructure demand through expansive thermal and power systems, including their partnerships past 2021. Next is their gross margin percentage, which highlights gross profits against revenue, where higher percentages indicate greater profitability. Vertiv's gross margin growth turned positive in 2023 due to shifts in demand for liquid cooling products and their services, as well as pricing changes to help counter against tariffs. While Vertiv's competitors have a higher overall gross margin, Vertiv's increased revenue during the same time period showed that their cost control has improved in recent years, also causing that positive shift in year-over-year growth. Next is their EBITDA, which is another measure that assesses a company's profitability, excluding non-cash expenses. Their EBITDA has tripled from 22 to 24 with an average of 40% year-over-year increase. And this growth shows an increase in the company's operational leverage, again, through those service contracts and AI infrastructure deployments. Next is the EBITDA margin. Growth in EBITDA is also highlighted by the increase in the EBITDA margin past 2022, where the change from negative to positive growth is also explained by the increase in revenue during that same time. From 22 to 24, their EBITDA margin has over doubled, now at a margin comparable to its competitors. Again, margin increases for Vertiv during this time is driven by their liquid cooling technologies and services, generating recurring revenue. Next is EBIT, and EBIT highlights how much profit a company generates before expenses like interest and taxes. Vertiv's EBIT has increased over $1 billion since 2022, nearly a 51% increase year over year. This change from negative to positive growth into 23 is driven mainly by the surge in AI infrastructure and Vertiv being able to meet those modern demands. EBIT margin, Vertiv saw massive growth again in 2023, jumping from a 4 to 3%, and then continued positive growth into 2024. In meeting demands for AI infrastructure, their acquisition of CoolTera Limited helped them excel, especially in that liquid cooling product line. Now, in 2024, their EBIT margin is comparable to their competitors, despite Vertiv's relatively focused data infrastructure strategy. This emphasizes Vertiv's upward scaling and optimizing profitability. Next is net income, which serves as the bottom line for profitability and financial stability. From 22 to 24, net income increased 6.5 times after being profitable for the first year in 2021. This massive increase in net income after 22 further highlights the great year Vertiv had in 2023 and highlights the company, or how the company has had a high growth and how the company's been a high growth and high margin leader within the industry.
All right, and going to the basic EPS, as we can see, it's growing. It broke positive in 2021, and since then, it's broke $1. I think that's huge growth for the company, but there's not much to say without repeating myself on how this is a new company, showing dominance and trying to be a mature company as their competitors. And then as we can see in the asset turnover, it's flat. There's really not much to talk about on this slide. We go from 94 to 94, 67 to 65, 60 to 61. It just shows a measure of how effectively a company is using their assets to generate revenue, and there's not much change there. And then we have the return on equity. While the peers stayed flat-ish over 2019 to 2024, going 5 to 6 and 5 to 7. Vertiv has shown that they're a young company and they're willing to grow. So Vertiv's shown huge growth from 2022, especially to 2024 in those 2 short years. Same story for return on assets. Peers lagged, Vertiv pulled through, and we'll see the same thing when we go to the return on capital. It's just the same story being told. But yeah. Then we have the leverage-free cash flow margin. It continues to strengthen as CapEx moderates. Higher recurring revenue from these services will continue to feed that improvement as we can see the growth for services are going up. So hopefully as that happens, the free cash flow will keep going because that's just less money we have to spend. So yeah, and strong M&A will support this cash flow that will be used for that. And then debt equity, it's high historically, but it has trended down since they've grown. Like I said, they became public in 2020, which doesn't concern me too much compared to their peers. So showing the 4.56 debt equity going down to 1.29, it shows consistency with the free cash flow debt, which seems manageable as we go on to these further years. And then as we can see throughout all the peers in Vertiv, CapEx is growing for all these companies, which is good because this is industrials and we need money to take over. And relative to the market cap, you can see it's correlated as they grow with their CapEx. And out of all of the ratios, this is the most concerning when I saw this. So I did a little digging. So price to book value is inflated at 20, which is huge, but it's because of their intangible assets and their market optimism. But given that Vertiv doesn't own any physical infrastructure, it's focused on engineering and software integration. That means their book value is low, inflating the ratio. They also have high intangible value in proprietary cooling and power designs, 3,000 patents and long-term tech relationships that just don't show up in the book value. All in all, this shows investor confidence in future cash flows. And as we know, a higher price to book value means investors are paying a premium for the company's intangible value things that are not fully captured on the balance sheet, like tech, brand, and service contracts. And this is one of my favorite charts. I got this from Bloomberg with the Bloomberg Intelligence. Here is where you can see why the high PE is justified. Vertiv's PEG is 1.4 compared to the sector average above 2. As you can see, Eaton is on there at 2.5, meaning you're paying less per unit of growth. And yes, their PE right now is elevated compared to the sector, but I still think the PEG ratio makes up for it. But I'd love to take some questions on that. And then the intrinsic value calculation, the jump from 2024 of the earnings per share of 1.32 to an expected 4.84 in 2026 is a huge jump. I don't think it'll be that big, but I do think it'll grow due to AI build out and higher utilization, as well as expanding their margins through liquid cooling and lifecycle services. The PE comes down slightly from 77 to 62. That I do think will normalize to the 60s when earnings start to catch up with valuation. And Troy and I both would love a 72% gain, and we're here to play it out. But if you want to see any other run-throughs on bear cases or anything, I would love to put that in discussion board. Just let me know. All right, and here's our investment thesis. Vertiv's still early in the AI cycle, but already executing like a mature company. That's a combination of rapid growth, disciplined capital management. It just shows that Vertiv's transition from turnaround to stable cash generating growth. And their expansion is a great story to tell. It's powered by AI, and not only AI, global diversification. Their lifecycle service model keeps customers tied to Vertiv's long-term, generating steady recurring revenue.
And yes, Vertiv's valuation is high. There are tariff headwinds, and there's global AI infrastructure pressures. But their spending in that sector continues to surge. While their exposure to AI is often viewed as a risk, we do see it as a strength. AI is a new industrial revolution, and Vertiv is the ecosystem that powers it.
And I do want to touch on the heavy AI exposure risk. Right before this, actually, I was doing some running with some correlation matrices, and I was trying to see how correlated they are with technology stocks. And with the weekly returns, they aren't as correlated as we think. It's anywhere from 60 to 70% with some of these companies, but it even went down to 20%. So as I do think that is a risk, I do think that, as Troy talked about in the AI bubble exposure, I think that we can tackle it.
And we both believe that this is a confident buy. Vertiv combines financial maturity, AI-driven innovation, and global diversification better than anyone else in its space. And it's not just supplying data centers, it's enabling the infrastructure behind the AI revolution.
Awesome. Thank you guys for listening.
Thank
See
you.
in class.
Now we get the awkward moment of trying to figure out